Intel is by far one of the most interesting stocks in the entire stock market. The stock has been flat since 1998 or 1999, and it's been a disaster for Intel. It's been a disaster for shareholder. But a lot of things have been happening recently, including the US government itself taking a stake in Intel. And that's going to be a game changer. Something that Charlie Munger said. He said, show me the incentives and I will show you the outcome. And now the US government, which pretty much has unlimited resources, you could kind of say they have unlimited power. They have a lot of power. And they are incentivized for Intel to succeed. They want Intel to succeed at all costs, not just because they're invested in it, but also for national security concerns. So that reminds me of MP Materials with a lot of the rare earth minerals, and I skipped it because the company kind of looked bad. But I should have thought about it where they have to succeed, like the government wants them to succeed. And it's the same thing with Intel. The government wants Intel to succeed, not just because they're invested in it, but also for national security concerns. And there's no other player that could make it happen in the United States other than Intel, pretty much. So Intel received $5.7 billion from the US government on Wednesday evening so far, but their total stake is worth $11.1 billion, $8.9 billion in terms of cash, and $2.2 billion from the CHIPS Act grant, which Intel has already collected, I believe, back in 2022 or in 2023. So now they collected 5.7, the stake is 8.9, so I believe there's still maybe $4 billion left that Intel will likely receive from the US government. Now, I'm not going to comment if this is going to be good or bad for Intel, but the CFO of Intel himself, he said, having the US government invested in us and invested in our success is absolutely helpful. At the end of the day, we're going to have to bring out the processes and execute on the business, but to have their support and backing, I think, is helpful with customers. So for me personally, and I'm just speculating, I would not be shocked if whenever those fabs are up and ready for Intel, if the US government doesn't maybe pressure AMD and NVIDIA to shift a certain percentages of their orders to Intel from Taiwan Semi and other kind of companies outside the United States, I would not be surprised if that happens in general. And again, the US government is now, incentivized for Intel to win. And if you're betting against Intel, you're betting against the US government. And normally in the market they say don't fight the Fed. And I would say don't fight the US government in this case. So I think it will ultimately be bullish for the company, but it's very early to tell. Now, in terms of the total cash they raised $12 billion this quarter. So they raised around $1 billion from Mobileye. They're still selling their stake in Mobileye, which is a great business. And then they have the Altera acquisition, which they're going to sell in a couple of weeks. This is going to generate $3.5 billion. $2 billion from SoftBank, which put up an investment from Japan, and $5.7 billion from the United States government. This is $12 billion raise. So now Intel has more money than ever for them to finally finish those fabs, and it's long overdue. They apparently need more money than the $12 billion. And I said there's likely going to be some opportunity for outside investors in Foundry, and that will probably be our second opportunity to raise cash to fund the growth on the Foundry side. So maybe they're going to ultimately split the Foundry side apart, and they can put a joint venture and get in a lot of investors, maybe from other companies and AMD and NVIDIA, and raise some cash and make it happen. So they ultimately need much more money than the $12 billion, but things are starting to move into the right direction. Now, if we look at Intel, the money isn't just going down the toilet. They're using money to expand, property, plant, and equipment, and for them to build out those fabs. Now, if you look at the gross property, plant, and equipment, it has grown from $100 billion in 2017 to $210 billion. And CapEx has been around $20 billion a year. And, property, plant, and equipment has been growing around, $20-25 billion a year. So again, the money isn't going down the toilet. It's being used to build those fabs. And those fabs, once they're built, they're pretty much very expensive and almost impossible to just replicate overnight. So Intel is going to have a competitive advantage once they are built. If you look at tangible book value per share, it has also grown from $11.09 to up to $17. Now it's at $16.37. And the numbers are a little bit outdated because now they did a raise and they're going to dilute stock and raise some money. So it's not the latest numbers, but it went from 11 to 16. So again, tangible book value per share is also increasing. Now, if you look at the latest quarter, it wasn't really good at all. Revenue was pretty much flat, gross margins down, earnings per share negative. So again, it hasn't been a good quarter for Intel in terms of their AI PC kind of segment, which should be booming because AMD's AI PC segment is booming like never before. For Intel, it's very dull. It's pretty much flat. And again, this is Intel. They're a little bit behind in terms of that stuff. In terms of the AI segment is growing a little bit year on year, but quarter on quarter, it's really been flat also. And if you look at Intel, they're still losing market share to AMD in terms of server CPUs and PC CPUs. And AMD is still taking market share from Intel. Now, in terms of the foundry business, which is expected to bring in massive free cash flow once it's built for a company like Intel, it's still losing money, 4.4 a quarter, and it's been burning money like never before. But it should be completed. I believe the expected date is late 2026 to 2027. So we're getting very close to a major inflection point for profitability with Intel. Intel still has a lot of stakes in Mobileye and others, and those stakes actually is one of the best sides of their portfolio, and they've been selling them, and they're going to have to continue selling them if they want to raise cash to build the foundry. Now, if you look at Intel's price to tangible book value per share, so tangible book value is if you pretty much liquidate the company, how much you could get for it. And Intel is trading at 1.5 times price to tangible book value. The mean was 3.7. It traded as high as 8 times tangible book, and now it's trading at 1.5 times tangible book. This is dirt cheap for a company like Intel. So you're only paying 1.5 times liquidation value. And those companies, they don't trade at those prices very often. Now, if you look at the expectations for Intel, 2024 was expected to be the worst year. 2025, it gets better. 2026, it gets much better. 2027, it starts ramping up. And 2028 is the year where Intel is expected to bring in massive profits for the company. Now, if you look at the expected earnings per share for 2028, although that's hard to take into consideration because no one knows how 2028 will look like. But if they get to $2.70 and Intel right now is trading at $24, this is like 9 times earnings. So 9 times 2028 earnings, this is dirt cheap. The company would be trading at maybe 30, 35 times by then, especially if it's a national security stock. And those kind of stocks, they tend to trade at a massive, massive premium. So for me, whenever I look at Intel, I see something very special because if Intel, many have been betting on Intel to play out because it's cheap. But if there's a time for Intel to play out, the time is now because they have more money than ever. They have a lot of backing and they have the US government on their side. So if they really fail after all of this, then this is really one of the worst businesses I've seen in my lifetime. It would be terrible if they can't make it happen now. And the US government wants them to make it happen. So the way I look at it, at 1.5 times tangible book, and with all the money they have, I would say Intel for me, I'm considering it as like a speculative position, so maybe a small position, and just leave it in the portfolio, see what happens. I'm still thinking about it. But to me, if you own Intel, I think the setup looks really good. It's very compelling. It's in a very good spot from a national security perspective. And again, if it wants to play out, the time is now. They have the money, they have the backing, they have everything. So for me, I actually like Intel. I'm not against the company at all. And I think it's worth some kind of a speculative turnaround kind of position. And to me, it's very attractive. Even though I own AMD and AMD has been taking market share from Intel, I see a place for Intel and I think it could do really well from here. So that's just my opinion on Intel, not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.